Hello everybody, welcome to the TraderMerlin Show. It is your Tuesday edition. We call it Taco Tuesday, All-Time High Tuesday, you know, whatever you like. It's going to be a fun one today. We had a couple questions that came in regarding breakouts, and I thought, you know what, today was probably a good time to do it since my guest has been calling all kinds of levels, I will say, and those levels have been actually breaking out. So it looks like we have some talking materials today. For those of you who have any questions, feel free to send those on in. You can put them in the chat down below. Hello everybody who's joining us today. Yes, we will talk about gold and silver today as well, but I want to make sure we get to the topic at hand, which will be breakout trading. Our guest today is none other than Tillie Allison-Harris. So Tillie, welcome back to the show.
TraderMerlin, hello to everyone. Happy Taco Tuesday.
Right, Taco Tuesday. You don't have good tacos out there in Kansas City, though. I'm pretty sure you got to come to California for that stuff.
Or Texas.
Or Texas, right. Somewhere down there. Tillie, congrats on your market outlook. I saw on Monday we came right into some key levels recently in the last, 24 hours. We've broken above your 4-hour time frame distribution zones as well as the 60 minutes. So we're ripping through those. What's our next stop here? I'll even bring up a chart of the markets for our viewers so we can see it, but it's been looking real strong. Is this the setup for a breakout trade?
Well, Monday when we opened above those areas of distribution, waiting for an area to buy. It's kind of hard because, of course, when it's breaking out, you know, everyone wants to buy. So when it breaks out, we have to try to find an area where we can buy when it pulls back. And that can be kind of hard, you know, because you're trying to find which, you know, low it's going to come to. So when we traded above those distribution areas, that was pretty good an indication of don't be trying to short sell. Mm-hmm. So the benefit of having those distribution areas is if price is in there and a short sets up, then we can short the market. But in a major bull market, waiting for price to break above those areas clearly states, you know, the market is telling us that the bulls are you know, going crazy and it's a bull run. And then trying to find an area to buy in is not easy. Yeah. You know, it's really kind of hard sometimes to manage risk when it's, you know, like breaking out.
That it is. And especially, you know, I'll bring up the ES, just do the @ES for the viewers so you can see this as well. This is your S&P 500, and clearly this is the weekly time frame. You guys can see just a monumental run, a historic run from below 2,200 to right now. We just broke above 3,300 on the ES. Not an all-time high, but certainly impressive to see it getting back up to where it was almost pre-COVID. Do you look at things like that $3,000 handle as almost like a magnet towards price that's going to cause maybe a bull trap out there?
Probably, you know, and that's what we're talking about. Like, you know, every time the market does break out, typically it'll hit some area of distribution, and that's, you know, a bull trap. And so that's why I said it's, you know, requires patience and to be able to find those areas when it does pull back. And then the sad thing is sometimes you get caught in the trap, because then it only rallies back to the recent high, and then it can swing back down lower again. So there can be a lot of whipsawing.
Yeah, and we are, guys, as you noticed on those charts, ripping towards those all-time highs on the S&P, which, I hate to say it, will probably act as a magnet towards price. It's just right now people thinking that what happens is people get in this mindset of, oh, markets are going to make all-time highs, and it almost pushes it, kind of like a Ouija board where it pushes price to get up to those levels. So we'll probably see this chart in another couple weeks rip through those all-time highs. My guess is it'll go a little bit higher and then start to have some sell-off, because I do believe there's some correction that needs to be done on this monstrous move for the market. So that said, Tillie, let's talk about breakout trades. I actually had a question here from a viewer. Let me bring this one up so we can keep things clean and uniform on the show. This is from Taylor. Let's see. Taylor says, I was watching your show with Corey Lane, and I would love more explanation on breakout trades. So I thought it might be nice if we could maybe go and appease Taylor and talk about breakout trades. So first off, are breakout trades things that you're looking for?
Okay, I would say that the breakout is a signal to join the direction of the trend, but our particular strategy or setup, if you will, really has to be defined by our ability to get in the trade. So the breakout trade, if you will, can be traded so many different ways. Some people are already long the market right now. Yep. So many times when you're already long the market, you're looking for that breakout to confirm that we're in the right direction. And, you know, adding to a position when you're already up is a whole lot easier than trying to get into a position when you've got, you know, capital to put at risk. So I think the breakout above a supply zone or distribution area, above those highs, you know, a breakout above the highs is a reason to look and see if there is an opportunity to buy in if you're not already long, if it's the upside. And then, though, again, if you're already in a long-term trade or position, adding to that, that's definitely a time to scale in.
Scale on in. Yeah, I am a breakout trader. I actually really do enjoy breakout trades, and I will show viewers a couple different things here. I know the screen just went totally blank, and I just wanted to show this to give a sense of perspective of what are different types of breakouts. So, we could have a market that's just been ripping up. You see it's ripping up there, and then all of a sudden you have some consolidation, and then, simple thing to do is just put lines above it. And a breakout doesn't have to necessarily mean to the upside. In this case, we could have a breakout that breaks the highs or breaks those lows. And I guess the key point here is it's about what rules are you using for that breakout. And this is an easy one when something is horizontal like this. You could also have it where it's more of a pennant formation like this. And, we could still draw lines across those highs, across the lows, and be trading a breakout one direction or the other. So again, it doesn't have to be a linear piece where it's totally horizontal. Another one would be this. Third example I'm going to do on the left or right-hand side of your screen is here's the night before. Markets close, and then the next morning it opens up down here, and let's say it establishes a range for the opening 15 minutes. A lot of traders will do this, and maybe I can get Tillie's thoughts on this one too, is, if it's in that 15-minute range, what a lot of traders will do is put a line across the high of that 15 minutes, a low of that 15 minutes, and say, okay, I've now established that opening range. And it could be the opening 15, the opening 5, opening 30, guys. It really depends on your personal preferences. But the same basic principle applies. You're waiting for that breakout to happen outside of that range to make the trade. And those are kind of the basic structures there for Taylor who want to know about the different types of breakouts or what breakouts are. That's really what the gist of the conversation is going to be. And Tillie, with a situation like we have now, you had the SPY break above, in essence, a breakout trade on your 60-minute time frame or your 4-hour time frame. Do the same rules apply there?
Well, I think what you're describing is the different environments where we do have breakouts. And so I think the time frame is a big deal. So oftentimes we might see a clear breakout above an area on like a daily chart or a 60-minute chart. And then if you go down to like a 2 or 5-minute chart, like at the open, where you're talking about the different environments where we actually see that breakout occurring. So there's lots of different time frames to use to be able to pinpoint kind of where that breakout is happening. So oftentimes maybe analysis like I do beforehand gives us an idea of where those breakouts could occur. But then we typically have to use different time frame to be able to determine where we want to buy. And some of those pictures that you're drawing of that environment, a lot of consolidation in an area, looking to buy, particular area in there for that breakout.
Yeah, no, I'm reading the question right here for to buy that breakout, and I think that's a good point. Joseph says OTA says to buy the pullback after the BO, after the breakout. Yeah, I don't know if anyone actually clearly states that. Again, I believe that this is a matter of personal preference, and you guys have heard me talk about this one before. And until I apologize, I know you can't see my drawings, my wonderful artwork going on. In this illustration I'm showing here, it's basically, we're going to call it's called a high type flag, where you have a real strong move to the upside, and then it basically goes sideways for a little bit. And you can trade this two ways. If you listen to what Joseph just posted in the chat, yes, there are a lot of people who say it's safer to buy the pullback after the breakout. So what does that mean? That means that, okay, we got price moving up. It finally breaks through this high, and I'll call this, let's say this high is at 15 bucks, right? And I marked on the screen. We have one down here at 13. So it's been traveling sideways in a $2 range. When it breaks out above this, you're not supposed to buy right away. The safer thing to do is to wait for it to come back down and retest what was supply and making sure it now becomes support, right? And making sure it's going to be an area where people are looking to buy in. This is a safer way to go. I will say that because you're now committing and waiting for the market to prove that that area will now hold. And then, of course, as it moves out, you make the trade. The problem I have is this, and you guys have probably all seen this, is it doesn't always do what you think right there. It may break and never look back, right? You might get this where it just keeps on ripping, and it just goes and goes and goes, and you're all left there going, son of a, are you kidding me? I read it perfectly. I had it mapped out for 3 weeks, and it finally does what I thought, and I freaking missed it because I was waiting for the pullback. it's all a question of which camp do you put yourself in. Do you want to be safer and maybe get it, or guaranteed get it and take a lot more risk? That's up to you to decide. Tillie, which camp are you in?
Well, I'm in both camps. So
of course you are.
what I love doing every week, and that's why I do the weekly analysis, is kind of anticipate that these breakouts are going to happen. So if we try to buy into a market anticipating a breakout, and I can see your drawings actually on a different monitor.
Okay, great.
Buying at $13. So if we're anticipating a breakout, buying in at $13 and already being in that position, so when it does break out at 15, you've already got a little bit of, income, if you will, or some return on your investment, and then we can always add to it, if you will. And at that point, we're not as concerned with our entry because we've already got some gains to work with, if you will. But I'm in both camps. I try to buy as low as I can, but I'm guilty as sin of buying a breakout. I'm human. So we try to buy as low as we can, but oftentimes, the market will be breaking out, and oftentimes you will see that there is no pullback, if you will. And that's whenever sometimes you do take on too much risk.
Yeah, I agree. I find myself predominantly, I will say, if I had to put which camp I'm in, I'm going to be 95% buying the breakout as it happens. And then I'll be probably a couple cents above that line. Just because the frustration, I think many of you that are watching right now probably understand this frustration. The frustration of being in there and watching it just run away from you and never come back to your entry price is just, it drives you absolutely nuts because you read it right. I'll bring up an example here, and Tillie, you probably have some examples too, but let me just start with this one with Altria. Here's your chart of Altria, and you guys can see on the daily time frame, certainly nowhere near as good as the overall market, but it has been building a pattern that I've been watching for some time, and it looks to me like it's gaining more and more strength, and it's called an ascending triangle. So I'll put some lines on here, and what's noteworthy for me about this specific formation is how many times it's hit that top line, right? Your overall, I don't know what you want to call it. They call it the base of the triangle, but it's an upside down triangle at 43.19. If I put this on Snap, you'll know how close this has become. It's not like it's way off as far as how many times it touches a price. The high of this candle was 43.15, and the high of this candle where it came back to it was 43.20. So it's making pretty much the same top, and it's building pressure. So, breakout trades are great. What would you be looking for here? You're looking for a breakout above, let's call it 43.20. If it gets above that 43.20 mark, then you could position yourself appropriately, go for the long side, and probably set your targets around 46. The only problem I have with breakout trades like this is why not buy right now? I mean, you're sitting on Altria at this uptrending line. It's sold off from those highs that we're targeting anyway. So, you could have bought in here right at about $40.75 and been waiting for it to get back up to 43.20 and made money there. So for me, breakout trades, you're quite often leaving money on the table, and that's one of my big problems with them, but I still take them anyway. Tillie, do you have any things that you're looking at as potential breakout trades or ones that you've been following?
Well, something I like to comment on, I think that a lot of people are thinking breakout trade is like something that you can visually see 100% on a chart as like this massive big move. But a breakout can happen. I was reading the text chat there about the S&P trading above the 240-minute distribution area of, what are we at, $327.53 a share. And the fact that it is trading above that clearly reveals that there is a, quote, breakout. Mm-hmm. And so looking to try to buy any low, whether it's a Globex low, on the open low, any low that forms at that point is, somewhere we'll be looking to try to join the uptrend or the breakout. So breakouts don't always have to be like this crazy giant big candle. Any trading above, a high, then that's considered a breakout. So, leveraged markets, we don't have to have a whole lot of movement in order to actively trade. So some breakouts, can be pretty small and still be a good trade.
Yeah, I'm actually, you got this one mapped out. I'm watching, I just brought up the SPY here, and I've kind of been doodling on the chart and mapping out that 327.20 high that we established about 2 weeks ago, or last week or 2 weeks ago. We're now kind of in a no man's land piece on this S&P, and I will turn my drawing tools on here so I can show you this, what I'm talking about, no man's land. I'm going from the close of this candle way back in February to kind of the breakout of that range. And you notice these candles currently are in this yellow box. That low that I'm talking about right before we gapped down in February was February 21st. Right now we're in the middle of that zone. And you've been doing this a long time, Tillie. Is there any kind of recurring or repeating process that happens in something like this? Because we had a big gap between 32.27 and I'll call it 33.33 on the SPY. That's a $5 range. That's a pretty significant jump, and we're in the middle of it right now.
Yeah, so look at like the 1 minute chart on Monday's open. Monday's open, we had a demand zone form, or where there's accumulation there. So Monday's open, we had a formation form, and there was a retest after the open. And I remember that because I'm teaching a class, and we were trading the S&P on the open on Monday. So I think about 9 o'clock Kansas City time, there are some areas of where we could buy in. Mm-hmm. So anyone that studied Online Trading Academy methodology, looking for demand zones to form anytime on Monday, knowing that we're trading above that area. So that's a way to be able to join in. And so going down to real low time frames, you can pinpoint those. And then on the S&P futures, you're trying to buy in any low you can find pretty much. So Sunday night was kind of tricky because the S&P opened and had a little pullback to 32.60, and then it rallied up, finally broke out the previous Friday's high, 32.70. And then here today, this morning, the low this morning was 32.70. So we're looking, for anywhere that a buying opportunity can present itself, and that's typically after the market starts to make a new high. And if they form some areas of demand there, that's Online Trading Academy methodology is looking for those areas of demand when we have those uptrend and when we have a break above the highs.
Right. Yeah, and for the crowd out here, we are. There's multiple ways you're talking about breakouts. Adam, you're right. You're talking about an opening range breakout, which again I emphasized on my previously bad artwork. I was really kind of focusing on this type of breakout that you see here on the screen. And the reason for that is this is kind of the situation that we are in right now on the S&P. Tillie talked about those levels in her outlook. We broke above it, and we've been sitting above this ever since. Opening range is going to be different, and you can find an opening range breakout every single morning on any stock because obviously they have an opening range, trading range. And a large part of that is due to institutional order flow filling. And I emphasize this fact that for some people like to do it on the 15-minute time frame, meaning I'm going to use 3 5-minute candles and I'll map out the high and low within that opening range of 15 minutes. I know traders as well that are going to say, I'm going to wait 30 minutes or wait an hour. Whatever that time frame is for you, it's still the same basic principles of trading the breakout. You're simply establishing a high point and a low point for a definitive period of time or price action, and you're saying if it gets above this level, I'm going long. If it gets below it, I'm going short, and that's very, very easy. I personally don't really trade a lot of opening range breakouts, and the reason for it is this, guys. I'm not lazy. I just don't like getting up. I hate mornings. I'm a nocturnal person. I spent 5 years of my life working night crews, so my clock is backwards. So I hate mornings. In California, getting up at 5 o'clock every morning to trade just doesn't work for me. So I do it occasionally, but it's torture. So I'd rather trade something in the middle of the day. So I don't do opening range breakouts too much. There you go. Tillie loves getting up early, though, don't you, Tillie?
I do, but what I found is I may be awake and want to go do some fun stuff, but I really have found that I better manage trades if I wait until after, 20, 30 minutes after the open, let things really set up. It's a little more solid. So if someone's looking for real short-term trades, I think they'd probably enjoy trading the open, getting in, getting out. But if we're trying to join the trend, waiting for a little bit of, solid data to work with, and 9:30, that's Kansas City time, which, wow, that's like 7:30, Pacific time. And usually the longer we wait, it's always said that, novice retail traders try to open the market and professionals close it. So waiting for a little bit more solid data to come in definitely makes it a little more safe.
I love that. That's one of my favorite phrases, actually, is amateurs open it, professionals close it. It's been one of my favorites since I started in this many, many, many moons ago. Cool. Let's see. Joseph says, are all Wall Street trading desks forced to be in this strong uptrend even though they know the economic corporate fundamentals are deteriorating? They're not forced to do anything. They can do whatever they want. Obviously, there is an objective on the part of that firm, and they will do whatever the firm wants to do. Right now, they're probably all going to be going long. I mean, why not? That's where this market is headed. So they will probably just keep going long and strong until this market gives them some clue or some trigger according to their system that says get out. So, I mean, I don't see it. I don't see that changing anytime soon. They're probably going to keep on pushing. All right, Tillie, I've got listener questions here on breakouts. First one, where was it? I saw it in here. Wayfair. Michael says, look at Wayfair. I did buy breakout at 248. Oh, that's a chasing at breakout. And looking to buy more. Does it look like it would pull back? So I don't know if you have a chart up of Wayfair, Tillie. W is a ticker symbol.
W. I do have my platform here.
I'll tell you what, that one's scaring me. I'm seriously, this one scares me, Mike. I'm praying for you, my friend. I'll put a line where, to me, is a breakout trade on the screen. Here is Wayfair. I have a horizontal line where it's the last good breakout. That is the last real breakout of a area where it's had issues getting above, and that's at 231, right around 231.40. You mentioned that you went on a breakout of 248. Let me put that line on your screen here just so the viewers can see that one as well. 248 is your data point there. And you'll notice that that's, you were on a run. So I'm assuming if we split this up into a smaller time frame, I'll bring up a 60-minute for you, that there was some, okay. So you really, not necessarily a breakout if you bought it at 248, right? A breakout would have been as it ripped through and made a new high. You were kind of doing it in consolidation. So bottom line is you were joining a strong trend. My fear on this one is it's way overdone and you're going to have a correction. But that's just my gut feeling. My gut feeling is not worth money, right? You got to put your money where your mouth is. And I wouldn't touch Wayfair. But Tillie, what's your thoughts on Wayfair?
Oh my goodness! I think we were looking at this a few weeks ago, yeah, or right when
this is the one that apparently, if you ordered a cabinet for $12,000, it came with a small child in it. Apparently,
right? Yeah.
I'm kidding. It's a horrible thing, but
we were actually looking at this, and the crazy thing is, and stuff like this. I know it requires a bunch of patience, but waiting for it to pull back to what 238,
yeah,
roughly, somewhere in there. I know that that's the thing about trading is that the market rips and everyone who's not already long, and that's kind of where here we go, shame on me for so-called long-term investing, but holding markets longer term, we're able to already be long when this happens, and then we can scale out. So that's where I think I have a little bit of I know long-term investing, a lot of people bash it because of the drawdown. But if it, long-term investing, if, proper reallocation is done and someone does the reallocation before it cycles down, we can already be long the market and then scale in and add to it during the breakout without, sweating bullets that you're taking on too much risk. Like I'm laughing here about some of the comments about, breakout trading around the open and the 9 o'clock reversal. Yeah, well, if you're already long in the trade and you've been long for weeks and you're coming in, you don't really care if you miss the 9 o'clock reversal.
Right. Well, and I think that's what I tried to emphasize at the beginning is there's multiple ways to trade breakouts. And I know traders who they will start their day complete empty slate, will find a market, pick out a couple different ranges, and trade that opening range breakout. Tillie's going to be looking a little bit longer term here. That's fine as well. It's all about having that plan in place and acting on it. So I love that that we have different ways of using it. Let's see. Adam, I'll get to your question in just a second. Tillie, let's take a peek at silver. So the futures contract of silver right now is just going gangbusters, especially today was a monster move for SI. So here's your silver chart. What you guys notice is we had that, I'm going to say, foreseeable pullback last week, right? It sold off a little bit, broke 26, sold all the way down into the 22 range, and then today just said, you know what? I want to make some significant highs and absolutely ripped today. Right now you're at 26.24 on silver, and conveniently it's making what most people would consider, I know some of you go, it's not exactly a double top formation, right? You are seeing it rally right back up to that area of supply, and this now is a question of what camp do you fall in, guys? It's kind of saying, do you like Burger King or do you like McDonald's? You almost have to put yourself in a different camp here and say, do I like silver right now as a reversal because it's forming a double top and I'm going to go short, or am I going to wait and go long on silver on a break above 20, let's call it 26.35? How would you look at this one?
Okay, great. So notice that the pullback that we recently had off of that wick high. So that wick high, the wick high that recently formed did not break any lows. So since no lows have been broken at all, that would be a no touchy as far as trying to short.
Mm-hmm.
Until we have some validation that the big boys are serious about selling, meaning that a low somewhere on some time frame has to be broken to be able to trigger any selling at all. So right now, I don't see any lows ever being broken in this rally. So that high there, that little pullback there, probably just an area to maybe take some profits, but not aggressive shorting at all.
Yeah, I think it's a bit risky. I think, and part of the reason it's so risky, guys, is if you look at this chart, I think you're in a phase right now where the retail investors, the people who really just don't have a clue, they're just kind of buying whatever is popular. Right now, silver and gold are the most talked about items in the market. It's no longer Tesla. It's like gold, all-time highs, 2000, and that you're seeing money pour into these. My guess is you'll probably see this rally continue. And yes, I did sell out of mine last week. I am fine with that. I had locked in a great gain. I'm happy to buy back in silver, but not at these levels. I even though it could break out to the upside, I don't like buying breakouts when I'm chasing something. And in this case, you'd definitely be chasing the breakout on silver. So I'm happy. I'm happy if anybody's still holding silver. I mean, I have some silver coins and gold coins, but I'm not actively trading those. Those are investment pieces I'll keep for a long time. So pretty crazy. Let me bring up that GC chart real quick just so you guys can see history being made. Yeah, there's your gold on the day. I'll go to a weekly time frame so you guys can see what this looks like big picture. You can't use a comma in TradeStation. It's got to be a dot. W. All right, there's your weekly. Just to put it in perspective, how gold has just gone absolutely crazy, and the world is loving. Anybody who's holding a ton of gold in their stores is doing really well. Here's your monthly, and you can see we're getting towards those all-time highs. We're getting there. All right, what are your thoughts on? Let's see. I think I had one question come in here from Adam. He says, I know this is not a breakout question, but if you have time, could you cover the mindset of holding a position overnight or when it's okay? All right, Tillie, so you got a student in front of you. When is it okay and not okay to take home overnights?
So it's very important depending on the product that we're trading. So rule of thumb, if there's a lot of leverage involved, not a good idea at all, very, very high risk to carry any high leverage position overnight. Because the market, bottom line, the market can move the full daily or weekly average trading range, so if that company or that product, whatever it is, moves $5, like the S&P 500 can move $5 a day. And because it's the S&P 500, odds are eventually it's going to go higher. There's, so much, priced into the S&P, but if it's an individual company, individual companies are so sensitive to anything, and they can drop their full daily ATR or more. Going into earnings is probably one of the highest risk times to think about, carrying overnight. So we really want to run the numbers and determine if we do carry overnight, what's the worst case scenario? If that product moves its full daily ATR, how much is it going to cost you, and are you okay with that?
It's a real tricky question, and I'll tell you what, there was a strategy that I was using back in the late 90s, and I'll just entertain you guys with some history here. Back in the late 90s, what I would do is I would find something that was going strong into the close, and historically, when things were going really strong into the close, they would gap up the next morning. So I would find something, if it ended at the high of the day and was ripping in the last 30 minutes to the upside, I would simply just take it long overnight because it was almost a guarantee it was going to gap up the next day. And as we point out many times on this show, if there's any sort of way that you can exploit something, some little nuance of the market, it will not last long until everybody else is trying to exploit that specific little thing. All of a sudden, it didn't work anymore, and I would find myself taking more losers going along into the close. So when is it okay? To me, it's always a risk depending on what you're trading. So if you're trading an individual security, you obviously have a risk. If you're trading a really popular one like a Tesla and Amazon, and you go in, there's always the risk you could have a major announcement to those companies and it gaps down, especially the really popular stuff. Drug stocks to me are an absolute no-no. I can't even trade them anymore, but if you trade long enough, you will see a drug company have a 50% gap down, 75% gap down. You're going, are you kidding me? Don't take those home. If you are thinking taking things home overnight, the best thing to do, in my opinion, is simply to take home something that's diversified. That's why, Tillie's always talking about SPY. You have a basket of 500 plus securities. If one of them gaps down 99% tomorrow, it's not going to kill the index. So to me, that's the safer thing to do, is if you're going home overnight and you want to take something long, buy something diversified. Individual stocks, man, I've been burned too many times. I still carry individual stocks, but it's usually not the real volatile stuff. And I know the risk according to ATR and things like that. So to me, that's kind of the way I would approach it, Adam, is really just making sure that the stuff I'm trading is not the real volatile, choppy stuff that bounces all over. And that it also has lots of volume traded. One way you can remove some of the gap risk is by trading things that have good liquidity. All right, Tillie, let's see. Sheena says the amount of, I agree with Sheena. I have a problem shorting silver. I wouldn't. I wait to buy it, but I wouldn't be shorting silver at these levels. All right, Tillie. Let's see. I got other questions coming in here. There was a question about different sectors, which I thought might be nice. Jorge says, when joining the breakout, do we still have to consider the curve? I noticed that sometimes the breakout breaks above the curve based on OTA. So we're not going to go into what curve analysis is, guys. That's obviously for OTA grads, and you can learn all about curve there. But as far as entering on a breakout trade, Tillie, how are you incorporating the curve?
Right on. So let's just say that there's an area that we anticipate there's going to be some selling. You call it distribution, you call it the curve supply, you call it supply, whatever, selling. If there's an area of selling above and the market trades above that, we need to look higher for the higher area of selling. So we need to reestablish our parameters and anticipate that the market is likely going to go up to that higher area.
All right, I like it. There you go. Curve in a nutshell. Short and sweet on that one. All right, Tillie, is there anything that's from your perspective, or any trades that you're looking at or setups that would be, maybe we could apply some of the breakout analysis to? Do you got anything that you're looking at other than the SPY? Because I don't want to make everybody think that you're this one-trick pony. Tillie trades a lot of different stuff, guys. Her weekly analysis is.
You bet. So if we look at the NASDAQ would be awesome to monitor these highs. And if we don't continue to break above highs, to wait for a breakout to the short side, meaning off of the highs. So we could monitor these highs every day or every week. And when we finally do have the lows broken, that's going to be a trigger to become real defensive in our whole stock portfolio, because there's a lot of concern, if you will, that why are all these commodities and other global currencies showing so much strength? Why is there so much money flowing into those? And so kind of monitoring the NASDAQ a little more closely, those tech companies. Mm-hmm. And if we do start to see any little bit of selling off those highs, if we get a little breakout trade off of those highs to the short side, that would be something. So the sectors that are underperforming, financials have been underperforming, real estate has been underperforming, the energy group underperforming. So any of those markets, that are kind of dragging the market down, the market. So why isn't the S&P beating the NASDAQ? Well, because you've got certain groups like the real estate, energy, and financials that are kind of dragging down the S&P. And so if those groups can become more strong, then the S&P might take off again. Mm-hmm. But keep an eye on the NASDAQ.
Yeah, and it's tricky because the NASDAQ has such a weighting in those 5 companies. To me, it's a little bit dangerous to be trading that one. To go back to the question about sectors and finding things that might be laggards here, I would encourage you to create a chart like this. I know for many people looking at this right now, it looks like I got a bunch of spaghetti on the screen. I basically just took the major sectors of the S&P, like utilities, consumer staples, industrials, healthcare, energy, financials, and I took the ETFs, so for example, energy, I'm looking at XLE. And then when you compare them to the S&P 500, it does give you a perspective as to how well they're performing. And this is just since January 1st, 2020. And you guys can see real clearly, there's a big separation. And one of those sectors is down 38%, another one's up 21%. That up 21% is going to be XLK, that's technology. Why? Because of Amazon, because of Google, because of Microsoft, because of Facebook. Down here below at 38% slide, you're looking at energy. Why? Because energy is not doing good. That's a collective overall thing. And I think this is where you kind of have to formulate your own opinion and say, is energy, and this other one down here, I'll tell you what the second one from the bottom is, which is down 22%, should be financials. It is financials. Are energy and financials going to now rally and get back up to the S&P's return, which looks to be almost 1.5% for the year? Or is it the other way around, that technology and semiconductors up at the top there are just too strong and will come back down towards the mean reversion? That's the tricky question, because it looks from this picture that the vast majority of sectors are actually underperforming the S&P, and just a handful are overperforming. And when you have an imbalance like that, I've made this point a few times in the program, you're going to have a mean reversion. At some point, something will catch up, and I don't know. I don't know which one it's going to be. My personal thought is money will flow out of these tech companies, and that will start to drop and maybe move back into energy, and some of those will move up. So I don't know. It's a tough way to look at it. But I always encourage you to do this. If you don't have TradeStation, you can go to stockcharts.com. They also have an easy methodology for you to do. It's called a perf chart, a performance chart. Let's see. Tillie, do you know, well, I don't know if you follow David Warner. David Warner does a lot with like whole number psychology and quarters and dimes and things like that. He says, is in the Forex market, you could use the whole numbers as a momentum breakout trading. And I would say yes. If you're using a specific level and understanding that people are drawn to a level because of a psychological reason, then that's justification for a breakout, right?
Oh, absolutely. So I think there's I forget what they call that, but a lot of algorithms and also mutual fund investors, like big companies, they are basing all of their decisions off of percentile movements, and those percentages oftentimes are run off of round numbers, and then you break it down into fractions. So, quarter point moves, I think if someone looks really into it, you could probably find that same type of pattern on quarter point moves, really, really small moves, and then you get the bigger move, of course, on the round number.
Yeah, I would agree. I think there's definitely something to be said for whole number breakouts. Today, right, actually, as of this exact moment, you have two markets that are approaching very significant and very noteworthy numbers. First would be the S&P 500 at 3,300. I mean, that's obviously a pretty big number. And the second one, which I think is even more important, is gold at 2,000. I mean, that is a big handle number that everyone's gravitating towards. Now the question becomes, where does it go? Is it now going to jump to 3,000, or is it going to have a pullback? And my money is on typically a bull trap, which gets everybody into it long, right above 2,000, and then it's going to have a nice little pullback. But that's my take on it. But those whole number psychology breakouts can be great, especially in the context of where that trend was. What I really like personally is if I see something that's in a downtrend and it starts to form some highs and then it breaks those highs, that's my kind of favorite type of breakout, because you've had all the pain of the sell-off and all of a sudden it might be turning and moving back to a new uptrend, and you're buying the breakout that may have started all. So to me, that's one of my personal favorites out there. Tillie, what's the new on your plate? Are you teaching again this week? I know you mentioned you were teaching last week. You got class going on right now?
Actually, we have class this week. And so I'm really excited because, with the COVID, we have very small classes. And I'm very excited because in a very small class, I mean, you really get to have a lot of fun.
Yeah,
so I'm sure all of you out there, taking classes before and anything. And when you have a big class, you're just not able to really, have a good time as much. And when you've got, a handful in the classroom, you can really, trade and have a good time. And I think the less computers there is to look at, the less mistakes can be made. So it's easier to get everybody in the trade.
Mm-hmm. Well, I will tell you guys, for the viewers out there who may be students at some point, you think, oh, it's difficult to be a student and sit there for 8 hours. Try being a teacher. There's an old phrase that says, it's like herding cats. Yes, you get a classroom of 20 or 30 people, that's a lot of cats to handle. When you get 5 or 6, it's so much more manageable. But cool. Well, so that's in Kansas City, I'm presuming?
Yes, we're in Kansas City.
Do you have a custom face shield? I figure do you have like a hazmat suit to teach in with a little face shield going on?
No, but I do have a. This is from Florida. I do have my pretty mask.
Nice.
Yeah, you know.
Mine's a little more evil. I want to thank my friend Chelsea for making. Chelsea sent me a whole package of these ones. I got some.
Yeah.
But see, I feel like now we have to have our COVID hearing aids, because how many times have you gone to order at a restaurant or something and you're like, can I get this? And the guy, I can't hear you. Could you? Oh, you have your mask on. Oh yeah, that drives me nuts. Anyway, sorry. We won't do our COVID mask show.
And I'm going to be hopefully doing more online things, trying to coordinate that.
Cool. Love it. Well, again, thank you so much for all that you do with your market outlook. It's been phenomenal. Your levels have been great. I'm kind of hoping it doesn't rip to all-time highs here, but it sounds like you're thinking it's going to be headed there. We're headed right towards those weekly highs and monthly highs. So I'm looking forward to your updates on your next market outlook.
Awesome. Thanks, Merlin.
Thanks, Tillie. Have a great day.
Bye.
All right, guys, that was Tillie Allison giving us some insights into breakout trades. And again, it's not one-dimensional. Breakout trades can happen in so many different forms. I noticed right away, and that's why I wanted to draw those charts, right away a good subset of you were already talking about that opening range breakout. And that's a great strategy. I actually think it's great because it gives you a very simple, specific set of rules. And you can build on that. You can modify it very easily. So that's one type of breakout strategy. But as we mentioned, you can have whole number breakouts. You can have pattern breakouts. For those of you who follow my candlestick formation piece, I love looking at candlestick formations and finding breakout trades on candles. Which ones? Well, specifically, hammers and shooting stars. I had two trades today that I mapped out that I was really upset about that did not happen in the trading day. And I know it's really frustrating. I will show you those right now. Why don't I just show them to you and make it easy? First off, let me run through what might be potential for tomorrow. I'm just going to show you patterns because I like looking at breakout trades, right? Yes, I did get a haircut. Thank you, Katie, for the haircut last night. I was going to do it myself, guys, and my friend's like, no, let me butcher your hair for you. My people at the office are calling me Nick because she took a nice little chunk out above my ear, but that's all right. So here you have my scan and filter. I'm just running for hammer formations, right? That's simple. Citigroup. It says it has a hammer. Oh, this is a weekly. I'm looking at them on a daily. It says it has a hammer formation. To me, that's not a hammer, not noteworthy. How about Reg? Reg does have a hammer. It's at the bottom of a slight downtrend. You know, not that great. I'm not that interested, but I might make a note to watch out for that one. INCY, Insight. Nah, doesn't look good to me. ALXN. Actually, even though it's not where I would want it to be, I actually wouldn't mind. I'll probably keep an eye on this one. Oh, it's pharmaceuticals. Never mind. Can't trade it. If you guys can trade pharmaceuticals, keep your eye on ALXN. Just this candle formation, especially the last 2 days, actually looks like it may be about to have a trend reversal here. And of course, you can see it's come from 120 bucks. So that'll be a nice move. ESS. All right, ESS I like as well. Simply because you're in this really long, extended downtrend going all the way back into middle of early June, and you have a hammer formation formed today. So those are just two little ones you could keep an eye on for tomorrow. If you're looking for something bearish, I have no shooting stars, so that makes it easy. Now, as part of that filter, here's what popped up on the list last night, and I was a little bit bummed out. Or where did they go? VNO. That was a good one. VN to the O. I had a limit order in the system because I like this one. I like that it came back down to those lows from May and had a red hammer formation, 4 down days in a row with an unfilled gap. I really was looking forward to this one, and I had an order to buy on the breakout. And you'll notice the high here, it just didn't do it. It opened up above that line, came back down, but it didn't break below. It has to break down below 34.39 for me to break. And again, that's kind of a breakout trade. Right, and it came down to 34.43 on the low for today and just missed me by 4 cents on getting an entry. So a little frustrated on that one. That's okay. The other one that was really nice was ROL. This was a short opportunity. Same thing. You guys notice I had a nice shooting star mapped out here on ROL. And today I was just waiting for it to break down below 52.72. Unfortunately, it did not get below 52.72. The other one you want to keep an eye on is actually Apple. Here's Apple's chart. Yesterday I had a great shooting star. This is what a lot of people would call an island reversal, especially if it gaps back down tomorrow. But I'll be watching this one as well for tomorrow and potential. I may actually use options. I haven't changed my trading plan yet. I'm not going to trade Apple equities, but I may cheat a little bit and use options, use derivative markets there. All right, what do I got? I got a whole bunch of questions coming through here. Yeah, Dirty Kid says it sucks being in Pacific Standard Time and getting up early to start the market. Not only does it suck, it's imagine if you lived in Hawaii. I mentioned this in the show the other day. I really think it's great to pull up you can go on right now and go to Google and just type in maps of the world with time zones and just kind of eyeball where you might want to relocate if you wanted to take more advantage of time zones. Brazil was a great one because I believe it opens at 12. So at 12:30 in the afternoon is when U.S. equity markets open. That, to me, was a perfect one. Let's see. All right, you guys got that. Talking about hammer breakouts, would you consider that a hammer at the bottom on Intel for surrender? INTC. Here's your Intel chart. Well, yes. I mean, I would consider this hammer down here. It's not a great one. The reason it's not a great one is because of it really closed kind of in the middle third. It really should close in the upper third. So, yes, you could still use that the same way. It's just not as powerful, right? The only thing I was kind of expecting Intel to drop a little bit deeper. I thought it was going to hit down to that 46.50 mark. It just didn't get down as low as I thought it was going to get. But that happens. Visa, MasterCard. I tell you what, if you're a spread trader, Visa right now is just a cash machine, ATM machine. Look at the sideways channel on Visa. I mean, you've got basically a $10 range for the better part of 2 months. You're doing spreads, go for it. What else do I have? MasterCard, that was Visa. Let's go MA. Same thing. I mean, shoot, these are great spread trade opportunities on Visa and MasterCard. I have multiple questions about my scanner filter. Can you show us how you get into a shooting star or hammer candle formation? Mary, are you asking about specific entries? Yeah, I know, man. They always get long in alpha. Are you talking about specific entries, Mary, or are you talking about how I scan and filter them? You know what? Actually, I don't have a guest tomorrow, so it might actually be great if I actually just make that the show, if you guys don't mind, so that way I can not go until another hour and a half show. How about that? How about Sheena, and Mary? I will start tomorrow talking about specifically those candle formations, hammer, shooting star, and also show you the filter. I think that would probably be best, just from a time perspective, because otherwise I'm going to go long and I'll probably forget. So I'll make that the focal point of tomorrow's show, since I don't have anything, a guest on the program. I will make it question specific. So feel free, guys, send me in questions that you want for tomorrow. We'll talk about hammer formations, how to trade those, which I've done a show on that before. I can actually point you to that one, which I probably will, Mary. If you go back there, I forget exact show. It was a couple months back. I did one just on how to trade hammer formations. But I'll also go through the scan and filtering process, not just in TradeStation, but a couple other sites that may be beneficial to you. Things like FinViz or Stock Charts or Stock Fetcher. There's a couple good ones out there. All right. Well, that would save me a little bit of time and also gives me some content to talk about on tomorrow's show. So let me go and show you what I got cooking for mañana. Let's see. I already went over that question from Taylor. So Taylor, thank you for the question. And now that I've got this up, we've got so many little applications going on here. All right, let's go back and turn back on my screen. There we go. So here's what happened with us today. I just wanted to go over these numbers because we talked about factory orders, and if the number was going to be better than expected, that would be good for the market. I think this is why you saw it today. Expectations for factory orders were 5.1% increase. So we actually came out at 6.2. So all in all, very good out there, beating expectations on factory orders. There it goes. As far as earnings, you had Walt Disney report earnings today. A huge blowout on earnings. They were supposed to lose 43 cents per share, and they made 8 cents. That's probably because I watched every single Avengers movie back to back to back to back to back. Of course, we can look at Disney right now, and you can see the Disney's chart today. I will bust this into, let's say, a 5-minute time frame so we can see the wild swings, which they're worth that savage, I'll tell you. There's your aftermarket on Disney. Looking pretty good, up 5.73% right now on that earnings beat. Moving on to other earnings announcements that happened. Disney was aftermarket close, which is rare for a 3-letter ticker symbol. All these other ones, you had BP, Twilo, Activision as well, Sony, and that's pretty much it. For tomorrow, we'll look at the economic calendar first. Major stuff here is probably going to be the ADP non-farm employment change. That's always a big one, especially right now with the whole unknown and uncertainty about job creation. You also have ISM manufacturing PMI down here for the U.S. And if you're trading crude oil, don't forget, you have crude oil inventories tomorrow. Other than that, you've got retail sales coming out for Europe, which are expected to get a little bit better, but not as good as the previous number. All right, last piece is your earnings counter for tomorrow. One company on here I'm very excited to check out. That's going to be Square. You know, the more that these guys open the doors to cryptocurrencies and crypto payments, I'm definitely a big fan with that. You have Roku, CVS, Western Digital. So Western Digital is the company that makes hard drives that will break after a year and force you to buy another one because they're pieces of garbage. That's probably not their ad tagline. I'm just going to tell you that. CenturyLink and Energy Transfer Partners. And then this one I left this one on the list because I think it's going to be interesting. So many people were forced to now all of a sudden go start their own businesses and be handsy and craftsy and make all kinds of stuff on Etsy. I'm curious to see. My guess is they'll probably actually have a pretty good earnings number, as a lot more people were making stuff from home and selling it in that environment. So that's your economic announcements and earnings calendar for August 5th. It's also my dad's birthday tomorrow. Make sure I don't forget that one. My nickel announced today. I didn't look at that one. Oh, by the way, you know what? I have to remind the donkey of the day. I have to do a donkey of the day tomorrow. I have a donkey of the day. I meant to do it today, but I'm going to save that one for tomorrow. For those that don't know, I created this wonderful graphic here with even a bleating donkey here, just to have a little bit of fun with the topic. But I'm going to do the donkey of the day tomorrow because it'll require some explanation. And you got to just kind of sit back and shake your head and go, what a bunch of idiots. It's one thing I love to do in the marketplace. Joseph, I'm pretty sure that Western Digital wasn't even considering me as a sponsor. All right. I'd rather have a whiskey company and maybe Orville Redenbacher popcorn. See if we can make that happen. All right, everybody, that will do it for today. Again, if you like Tillie Allison's commentary, I would encourage you to go to my YouTube channel. It's TraderMerlin. There's a little piece there that says you can actually go to one of the playlists, and the playlist there is Tillie's Market Outlook. She does it every Sunday. Her levels were nailing it this week, and actually the past few weeks. She's just been phenomenal. It might be a great resource for a lot of you looking for maybe how do you better draw your zones or what those zones may be, and just help you overall with your trading plan. So check that out. It's a great video. And if you have questions for me for tomorrow's show, I would encourage you to put those down below the chat in the video. You can always send me emails at TraderMerlin.com if you have attachments or things like that. That'll be the easiest way to do it. Also, do me a favor, click the thumbs up button. That always helps us. It'll like the show if you liked it, of course. If you didn't like it, I'm okay with that. I would just love to know what you did not like about it. Many of you have voiced opinions about things that I do or actions or ways that I act. I have made modifications of that, and hopefully the show is getting a little bit better. I've curtailed my cursing. Every now and again I let one slip. Damn it. All right, that will do it for today's show, everybody. Thank you guys so much. I will see you tomorrow with a me solo show. So send in your questions, and I will see you all tomorrow. Take care.